All right. Good morning, everybody. How you doing? ¿Cómo allez-vous? Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. We're an ECN. We're a variable spread broker. We're a fixed spread broker. Whatever you want, depending on your business model. It's your way at Traders Way with me, Traders Wayne. Hey, we do these sessions every Monday through Thursday here at Forex.Today, 7:30 in the morning, New York time, which gets you ready for the open. It's also approximately London lunch. Good time to realign the satellites, put together our strategies, and work together as a community. Every Friday, I'm at fxstreet.com for premium members, and I'm also Forex Speaker of the Year. Very neat, very nice, very happy, very proud, very happy, fun times. Fred, Shay. All right. How about some coffee? Yeah, sounds good. So I'm out barbecuing yesterday. I go out to check my Boston butt, and I'm like, oh! Almost stepped on a 4-foot long black snake on my deck. I'm like, oh, what the heck is that? Gotta be careful where you step. Yeah. Yeah, holy smokes. 4, maybe 5-footer. Yeah, I should have cooked it, right? Yeah, I don't know what it was. We have king snakes, which are kind of like that, but they have yellow rings, and king snakes are not a problem, but water moccasins are, and I don't know, all black. Yeah, black mamba, I guess. I don't know. Yeah, you got to be careful. Yeah. Is that how you handle it in Nepal? Kill it? Yeah. I thought in Nepal you'd have to bless it and move it over. Yeah, just kill it. Yeah, in Nepal there are scarves. So, anyways, I thought that was funny. All right, so that's enough. No more fun. Let's get on with it. Let's make some money. So S&P 500 continued to go up as we talked about yesterday. That was the likely outcome, and sure enough, it's coming up. And remember, we talked about this area being the area of resistance for multiple reasons. So we're getting up there. And is that technically the all-time high? It may be, huh? Yeah. All right, so it's up there, and it's a cluster of weekly and monthly pivots. And so we talked about that maybe heading up, and then maybe cooling off. So anyways, kudos for us for setting that up. Okay. And so anyways, we're getting pretty close to that target. And we got this idea of risk on. And why do you think it's risk on? Well, we talked a little bit yesterday about the yen pairs and the idea that politics in Japan have gone as such that they may be able to now implement more radical strategies, or even strategies at all, that that could continue the Abenomics program, and that could weaken the Japanese yen. So 2 days ago, the USD yen was at 100. Yesterday, it was at 102, and now it's at 104. So yes, it's moved 400 pips. Did you catch it? Right? That's all it is. By the way, where did it open? We should probably go to that. So anyways, there's the S&P 500. That's that. That's good. Fine. So let's look at USD yen. Kareem, the other choice is not to do anything or to do something different. For example, politics isn't always easy, right? So we get all the Abenomics several years ago, and then the politicians jacked up interest rates. Like, what's that all about? So they always have the choice of screwing it up and making it worse. So don't you worry about that. There's always a chance, right? So to get a super majority now, let me just think of this. Let's say Republicans win the election. So what does that mean? Trump? All right. So let's say Trump wins the election. So he becomes president of the United States. And then 2 years later, let's say almost every senator and every congressman that goes out through their election process in 2 years. Let's say like 75 or 80% of them win, all Republicans. So you can imagine if you had a Republican and a Republican president, a vastly majority Republican Congress, and a vastly majority Republican Senate, you can almost do anything, even if it was fairly radical. And that's what the Japanese have, in the sense that they have cleared the way to do whatever it takes. So sometimes when you go in and say, we'll do whatever it takes, and we'll be aggressive with our policies, there could always be another point of view that says, hey, wait, slow down, that's a little aggressive. Why don't we jack up taxes in the middle of your economic programs, right? And okay, that might be stupid, but government and politics are usually about compromise, right? So in this case, no need for compromise, let's get radical, is what Japan is saying. Yeah, Marina, it's being worked on. It's an issue of the DNS services, and that's already been resolved, but it takes a while to propagate. Okay. So anyways, yeah. Okay, so very interesting. So we got that going, but I want to again point out the idea of M2, is up if you're a bull. And then look where we're caught. Can you imagine the shock that some people might be having right now if they're not using pivot points? They're like, why did it stop at 103.80, 103.83? Why didn't it go to 104 and stop, right? If you're looking at your chart like this, you're like, why did it stop? Why did it stop? Why did it stop? I guess that's okay, interesting, right? So pivot points, once again, get involved. But, so for all of those who like to trade pivot points, this is your buy zone. Okay. And does it help that this is also down here, 100? Of course. Does it help that non-farm payrolls was unbelievably dollar bullish? Yes. Does it help that non-farm payrolls was good for macroeconomics? Yes. Okay. But what else? What else did non-farm payrolls tell us? That the economy in the United States isn't crashing. Right? Weren't we worried about that after the 83 of last month? Oh, that's not a problem. But it also pushes off right? Pushes off the rate hike to maybe December, but the market's even pricing in middle of next year is the next rate hike. And that's what makes the stock market rally, because more cheap money is going to continue for a longer time. And that's good for business. Okay? Good for business. So anyways, you got to get your macro on at some point. And then we talked yesterday about maybe commodities, commodity currencies specifically, going up, right? Remember I said maybe more so Aussie than CAD, just because we're watching things like rig counts coming online and all that kind of stuff. Bruno, just another commodity idea. So maybe you weren't here yesterday. We were talking about one of the banks suggesting that the rally in bonds has hit a maximum, and that maybe bonds don't come down, but they don't go up anymore, which means yields are at their worst, right? Right? And that from here, things either kind of move sideways for a long time and slightly improve, which means if you want the next new rally, because remember, guys, and this goes to everybody here, it's all about the next new thing. So if bonds have been up and up and up and up, which means yields have come down and down and down and down and down, that's probably hit an apex according to one of the major banks. And that the next new rally will be commodities, which are at low lows. Okay? So until interest rates start to rise, which obviously isn't anytime soon, gold will still be attractive. Does that make sense? Because gold, which pays nothing, looks very attractive next to a German bond that charges you a fee. Is that better, Bruno? So as long as the German Bund is negative and costs you money to hold, you'll say, well, I'd rather just hold gold. So therefore, that's good. So how about this? Once the German Bund returns to, let's say, 0, gold will come down. So that's my theory, anyways, right? Of course, at the end of the day, what the hell do I know? I can't tell you what the future is going to be, but that's my thought about it. So anyways, we talked about that yesterday in New York. We talked about Aussie probably doing better than CAD out of true fundamentals. You know, this isn't necessarily fundamentals. It's just more like a choice. Yeah, okay, no, Charles brings it up. That's gold, but yes, perfectly well said, Charles. And that's what, the cusp of what we talked about yesterday, where I'm more apt to go with the Aussie. And when I say Aussie, I mean gold. Same thing, right? Oh, okay. Now, Bruno, you're talking about, okay, I'm always talking about now in the future. You're talking about gold went up 15% 1 month. Well, okay, all right, look, all right, that's already happened, but that's obviously because of the negative interest rates, right? I mean, yeah, of course. Okay, so I'm like, well, what's next? But what happened before is related to what would likely to happen now, but they happen at different velocities and that kind of stuff. So yeah, just so we all understand, when interest rates went negative, it was the first reason for gold to go up. By the way, 2 or 3 years ago when gold was falling, I was a big bear. Every day we're sell. The last major sell was at 1382. And the target at the time, and lots of people can quote me on this, somewhere between 1,000 and 1,100. And I discussed why, psychological levels, and defending, actual physical gold deposits and stuff. And sure enough, it went down to 1050, which is right between 1,000 and 1,100, which was interesting. And then, but I always said there was no reason to hold gold. I said it was all about yield, all about the yield. The world wants yield. The world doesn't want gold. Gold doesn't pay yield, right? So what changed? Yields went negative. The world wants yield. Yield went negative. So all of a sudden gold doesn't hold a negative yield, which makes it positive, which just gets you out of. So just think about, you have billions and billions of dollars, and you're really worried about losing your value. You could buy a bond, which, if it pays something, is same as cash. So what's the other choice? If now bonds actually charge you money, it's worse than cash. So you say, well, how about gold? Gold futures, for example, similar to cash. It's very liquid. It's almost as liquid as cash. And it only looks good relative to negative interest rates. That's the only reason, in my opinion, gold has gone up. Because it just simply looks better now relative to negative interest rates. When negative interest rates disappear, and the Bund and JGBs, for example, go back to zero, just even zero, we'll probably sell the heck out of gold. Does that sound nice? So that's why we're talking about in 2 years. Right? Bruno says, after NFP, you're expecting gold to go down. Well, again, don't think of it as purely textbook nonsense mumbo jumbo, because the old man that wrote that textbook lived in a completely different world. Okay? This is not your textbook world. Negative interest rates. Go through your textbook that you're quoting, right? Oh, well, if gold is... Okay, go through your textbook and find where it discusses negative interest rates on things like the Japanese 40-year bond, the German 10-year Bund. Look it up. Like, what happens? What does the world look like when the German Bund charges a fee? Right? It doesn't exist in the textbook. And in fact, the textbook would say, that's totally impossible. Yeah, you're right. It's totally impossible, but that's what we have. So thus, negative interest rates, as long as they're there, gold is more up than down. Okay, that's all. Yeah, but it happened. Completely impossible, but that's where we are. And I've mentioned this before, and I'll mention it again because it shows the drasticness of our situation. There was a time, and in the worst of the financial crisis, I was convinced, absolutely convinced, by price action, but also by theory, or modeling, if you will, that the U.S. 10-year T-note could not drop below 2%. And for the longest time, it would hit like 2.01, and it would come back, and then it would hit 2.5, and then it would come down 2.2, and then it would come back 2.6, and then it come down 2.1 again, and it kept hitting 2, and I would explain. Oh, it's very logical. If you look at the yield curve between multiple durations and maturities and stuff. If you look at the 30-day and the 1 year and the 2 year and the 5 year and the 10 and the spread between all of them and how they move together in coordination, just like Newtonian physics, 10-year T-note can't drop below 2% because that would push the 30-day or even the overnight to negative. And that just can't happen. And by the way, for about 5 minutes, during the worst of the financial crisis. I do remember watching the overnight go to negative. Very interesting. But I was convinced that the 10-year T-note could not drop below 2%. Well, here we are at 1.3. What? Yeah. And then imagine this. Imagine this. The audacity. Japan has a 40-year bond. 40-year bond. A 40-year bond. Holy moly. And that's a negative. Oh, wow. Holy. I mean, it's just mind-boggling. It's totally impossible, and it's so impossible, it's stupid to even talk about it, and yet here we are. So, wow. So, low rates for longer push the stock market up. Negative interest rates holds gold up. What's your risk on? And so yesterday we talked about Aussie. Yesterday we were there. So that I already did this, right? I already circled it. Cool. Down to the 21, right? And this is classic, especially in a very fast-moving market, up to a new high, and it simply just waits for the 21, kicks it up, and this is where we are today, similar to yesterday. And what could happen is it just moves sideways, right? And following this 21, you know, the 21 hits it tomorrow or later, and then up again, right? Now, of course, it won't go up forever, so you got to find your next level of resistance, which bears might take profit, and that could probably be the psychological level of 80, don't you think? Notice that it didn't even make a 382 today. All it did was come back to the 21 and gone. Didn't even 382. And it probably was because of the psych level. Now, was anyone trading this? Did you trade it in Asia? If you did, yeah, Gregor's did, Kareem did, Ronnie. Yeah, so you're probably eyeballing 77, am I right? Lazaro says, yep. Ronnie, yep. And the interesting thing is, if it wasn't 77, remember I teach you to look at the psych level, and it's 77 to 7680 is the buy zone, which makes it, that is sort of the logical area. And it didn't quite even do that. Okay. Did you play daily pivots? What did you guys use for your entry? Man, this setup's a mess. I said, Yeah, but you say pivots. Dailies? What did you play? Ba-ba-ba. Nothing. It's been 7 hours and 15 days since I made a profitable trade. All right. But what do you mean? You play it like a breakout? Really? So that's like a moo trade type thing? That's interesting. Yeah. Is anyone familiar with the moo trade? It was something that came to great fame 10 or 11 years ago. Holy smokes, really? Whew. Wow. A moo trade. Somebody asked me a million years ago. Think about this. 9 or 10 or 11 years ago, I was teaching people how to trade pivot points. Isn't it amazing? Oh my God. Yeah, 9 or 10 or 11 years ago. Oh, can you imagine teaching pivot points every single day for that long? Yeah, well, I'm on a crusade. I'm on a mission from God to make you profitable. It's amazing though, isn't it? Yeah, as in moo. All right, so somebody asked me 9 or 10 or 11 years ago, they're like, so I said, this is the pivot profit zone. And that's the high for the day. And of course, the low end is below us, right? And I said, so this is the top. This is where you always sell. Always sell. And actually, it's not always sell. It's always take profit, which is a little bit different, right? Okay, always take profit there. Always at R2. And then same sort of thing, like always take profit here. Take profit. Okay, that's what I taught. And so price would come down here, you take profit, and whatever. Price would come up here, you take profit. And then somebody said, well, Wayne, what do you do in situations like this where price goes above those areas or below that area? And I said, well, if it goes above your pivot profit zone, something is unbelievably, unusually bullish, so you keep buying until the cows come. Yeah, Miles says, now that's consistency. Yeah, no joke. I mean, it's amazing when I say it. I'm like, holy crap, really? That's so long ago. I wasn't even shaving back then. Yeah, my gosh. Okay. So, anyways, when do the cows come home? Right? Keep buying until the cows come home. What does that mean? Oh yeah, Daniel was there for show. What does that mean? Till the end of the day. The cows come home at the end of the day at sunset. So this is sort of an American, Canadian, maybe the Argentines get this idea. Maybe some of Spain. You know, if you're a cowboy, the cows always come home at the end of the day, right? To be fed. And so after a while, the nickname moo trade. The moo trade stuck with it, where in that situation, you could do something like it broke out, it pulled back, and you buy it, and you just keep going this way. Okay? And it stays bullish till the end of the day. And really what happens is it stays bullish until it hits weekly or monthly resistance and then comes down, right? Which is usually, it'll peak out, in this case, the top of New York, right? Okay? So there you go. So I don't know if that's what your trade was. You said, a break above, 78.56 or something. I'm like, really? See, I don't do breakout trades in trends. I think I've made that clear over the years, right? Where I don't like it. I think it's just the old way that trading was taught, and I think it's inefficient. Oh, fractals? Okay, that's interesting. Right on, Russ. Yeah, well, the turtles also blew up, right? So here's the idea, okay? Prices comes up, price comes down, and you say, well, if price gets above here, I'll buy. And then you say, well, it's got to go a little bit more above that in case of the double top. So now you're like, all right, if it breaks this, okay. So here's what I observed over the years. Okay, if you buy here, what happens next? Fibonacci retracement, right? And I found in my own observation of the market that everyone was taught to do that, and yet everyone was breaking even. If you ever find yourself where you're like, man, I've made like 100 trades and I'm break even as a trader, it's because you're doing that. Because what'll happen is, right, you buy here, you're up here, and you're like, jam the stop. So you jam your stop, it comes down, knocks you out of break even. Son of a... And then it goes like this again, right? We all know it's true. Girl, you know it's true, right? And if you don't do that, you suffer the worst consequences too. So how about you decide, okay, let's put this back here. Okay, so now you buy here, and what it does is then it comes down, and then you get out here, right? Because you want to avoid the pain of breaking even. Right? Is that a fair assumption? That this loss in this area, breaking even, meaning the loss of potential profit, is so upsetting that now you decide that you're going to take profit here now. And you'll say, well, the way to trade, the secret to trading Forex is take your profit and run. And you never get out of the exact top. So let's say if your entry's here, you're there. So now you say, wow, I'm just going to make lots and lots of 15 pip winners. And that's the secret to success. And then you can convince yourself, oh, well, it's low risk, and because, you know, you're moving your stop, and it's lots of little quick winners, and then you just convince yourself that's the way to succeed. And it seems very convincing until after the end of your first year, or maybe the end of your second year, or maybe the end of your third year, and you're like, I have lots of profitable trades, but I'm not filthy stinking rich either. And you're still driving around in your Honda Odyssey. Right? Bragging to your friends, I got 375,000 miles on my Odyssey. Really? You should be ashamed. All of a sudden, everyone's mad. That's a nice minivan. Oh, okay, settle down. I'm trying to, right? It is. I'm trying to just, you know, paint a picture so we can take this to the next emotional level. What I've always found is that you're better off buying the dip, not the break, in a trending market. Now, if the market is sideways, so again, ignore the chart, you know, just say, let's say you have support and resistance like this, then I'll trade the break when we do things like buy, right? There we go, now we're trending. That's when I do the breakout pullback. But if we're trending, buy the dips. Okay, not the breakouts, in my humble opinion. And therefore, what happens is when you do move your stop to break even, it doesn't knock you out right? It doesn't knock you out at -1 or +1, even worse, right? And then it makes another higher high, and you're in 2 trades, and you move this one to break even. And then this one survives and makes another higher high. Now you got 3 winning trades. And what happens there? Well, now you got 3 trades. The first one makes 200. The second one makes 100. And the third one, let's say, breaks even. How many pips did I make? Because the third one, what happens is it goes up, you're up about 50 pips, it comes back and knocks you out of break even on that one, right? Well, now, though, the combined profit is 300 pips. if you're doing 15 pips at a time, scalp, 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 you got to make 20 trades, all profitable, after the losers and break-even scalps are accounted for. On top of that, you have to have 20 winners, and you just might not have that many opportunities. Okay? You know, it'd be really cool if you showed us your fractal setup on Forex.Today. By the way, the DNS is up and running again, so it's working. Would you outline like step 1, step 2, step 3 for us? Absolutely. So Kareem, log in. This is right on the home page. Pop in your chart. How to trade Forex using fractals. Put it under trading ideas. My step-by-step approach to fractals. Okay, and then your first chart, step 1. And then you look, and then you type in all your analysis here for step 1. And by the way, if that's too small, just go ahead and expand it. Give yourself some room, bro. Okay? And then you're going to have to do step 2. So you click attach a file, and you attach another image. So step 2, I don't know, I'm just adding images, right? Boom. Step 2. Now you look for blah, 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 right? And this is step 3 now. Step 3. See how easy this is? Finally, we make the trade. We look for blah, 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 blah. Now that was easy, right? Check this. Save. Uploads the first. Uploads the second. Uploads the third. It's done. It's already there. See, guys? My step-by-step approach to fractals. Step 1. Step 2. Step 3. These are the images, right, and the text. How nice is that? Okay. Hey, by the way, guys, have you uploaded your photo? It looks so much better when you upload your photo. And you'll also have an opportunity to add a sentence or two about yourself. We don't need a paragraph. But could you guys do that today? Would you do that? I'll show you how. Click on your name. Go to Profile Settings. Okay, 3 things to do. Upload your photo over here. About me is where you put your sentence about yourself. And then down here, put your location, put your country. You don't need to add anything else. You don't, right? If you don't want to. And then, of course, if you use social networks, why don't you promote them here on Forex.Today? Okay? Right, Marina? Wink, wink, nudge, nudge. Aye? Aye, you know what I mean? Wink, wink. So yeah, so teach us how you use fractals. I'd love to see that. Yeah, yeah. Got it. I get it. I got it. I know it's good. My rhymes are tight. You wish you could. Right on, Marina. Hey, guess what I'm booking today? Booking my tickets to Joetown, South Africa. Woohoo! Just stretching. Oh, been doing a lot of writing. Yeah, I'm going to be in Johannesburg. Yeah, well, you can put someone else's photo there, Marina. Just don't make it somebody famous. Just grab a photo off of somewhere. Don't put mine. No, no. All right. Don't put Oprah Winfrey or something. But come on. We don't know if it's you or not. Just don't put Tiger Woods or John Cleese. Uh, yeah. Yeah, they could look alike. I'm not saying, but whatever. So that's really cool, guys. I look forward to learning from you and sharing with you and collaborating. So, anyways, there's that thought. Yeah, don't put Donald Trump. Feel free to put pictures of his daughters, though, huh? I'm like, who the hell's that behind him? Oh, that's his daughter. What? Yeah, Abigail. Oh my, I'll vote for her. Put her in charge. All right. Yeah, this didn't work out. Too bad, huh? Didn't it look like it was setting up? Too bad for CAD. So how do we trade this? Well, if you want to be a bull again, you got to do this. And that's essentially a breakout trade like a range, because you're calling that as a bottom, you're calling that as a top. It's essentially what it is. Now you could say, oh, no, Wayne, you're using moving averages, and someone else to say, oh, Wayne, well, you're using, yeah, it's all the same, right? It's all the same. It doesn't matter, right? Just as long as you're waiting for something. Of course, the second part of your plan could be as if you're a bear. Now, as a bear, I don't like the fact that it double bottomed, but, that looks very plausible too. In fact, it seems more plausible. Okay? So you could say when yen is strong, JPY, when JPY is up, you sell CAD yen. Sell CAD yen. Okay? And by the way, you could actually write this down and put it on your wall. I double dare you. And then the second thing is when JPY, because it's called a plan. When yen is weak, you will buy, and I know you can't see any of this, so you have to listen. Buy Aussie yen. Oops, JPY. Yeah. Isn't that interesting? It's called a trade plan. It's called a strategy. And boy, your trading starts to improve when you begin with that. Okay? And I would say that would be a strategy based on the supply and demand of oil, the fundamentals of oil, should continue to depress demand for the Canadian dollar. Also, we have a CAD central bank meeting and later this week, and I wouldn't be shocked if they either talk down the dollar or lower interest rates. It wouldn't be shocking to me. Okay. Now, the upside, of course, is going to be based on the Bank of Japan. So you have to pick your ducks, right? Which one's the duck? Which one's the goose? Oh, I said I wouldn't be shocked if they did. I'm not saying they do, they will, or even if they need to. All right. So who remembers this trade? We did this on a 1 minute chart. Oh, Daniel. Daniel, is this the one we did together? Oh, it is. And then we reviewed it the next day with everybody. Yeah, we longed this on the 1 minute chart. And I think the target was 76. Well, oil be. Well, that's only 500 pips, but pretty good scalp. What the? So you got that, Danny boy? Awesome. Did you? Are you in it? 73. Oh, well, better late than never. Oh, I remember too. We were watching it on the 1 minute chart. That's right. We're watching it. And I'm like, so you're going to do it? You're going to do it? I'm doing it. And you're like, I'm thinking about it. I'm going to wait for the pullback. And I'm like, yeah, well, I'm up 20 pips. I remember that now. And you're like, what? I'm like, yeah, well, you were deliberating. I did it. That's funny. Yeah. But, I only scalped it, though. Right. So the interesting thing is it did go way, way, way up. There's the second chance. Cool. Yeah. Right on. Nice trade. Since you took your love away, since you've been gone, I can do whatever I want. But nothing can take away these blues. Yeah, lots of resistance right there, huh? Yeah, just 76 seems to be very much a plausible top, which could make this a scalping opportunity to the downside, huh? Not really my style of trading, but you definitely could look for weakness here because we know right there is where the bulls are supposed to take profit. So there's going to be stops in here somewhere, right? So what if we see this later today, guys? Are you going to take that to the short side? What do you think, guys? You have to talk it out now. If you see something like that, are you going to take a short side? Because what you're doing is you're hunting stops. So you're going to wait till Asia? Okay. Miles says, I wouldn't. Well, you know, they're there. You'd be surprised if you look at the pivot points, you'd be surprised how often traders do exactly what they're supposed to do, and that's to take profit at the R2, which means some are manually getting out, and others are dragging stops behind them. So if you stop the next guy out, I'm just trying to, let's see if we can do this out to the daily. Kind of zoom in a little bit. Like just quick examples here. Okay, traders took profit here on a Wednesday, and look how many hundreds of pips it fell. Simply, let's say, I can't tell you exactly why, but let's just assume lots of people were stopped out or forced out. Same thing here, right? Look how many hundreds of pips it came. How about here? Okay. You might even say that this is the long side of this green area. Okay. Okay. So who knows? That this could happen, right? It may not, but it could, and it has in the past. And part of it is because traders are supposed to take profit here, so they take profit, so you get a red candle. And if another red candle comes down, then people that have jammed their stops get knocked out, which creates another red candle, which freaks other people out, which manually get out, which creates another red candle, which hits the next guy's stop, which creates a red candle, until you get like a Fibonacci retracement. And the guy that was smart up here gets back in here and makes another attempt. So there is just a downside opportunity, and I call that stop hunting. Now that works particularly well at the end of Friday. Okay. And I say that because if you were a hedge fund manager and you were sitting on a profitable position, but you were worried about giving up some of that profit because of something over the weekend, you're like, man, I just don't know if I should hold this over the weekend. What if I give it back? What if I lose a significant amount of these profits? I want to book this. I want to put this on my track record. I want to put this in the profit category. I got to take it. I got to take it. And all of a sudden, big red candle because you shorted into it. Oh my gosh. And all of a sudden they bail. And you're forcing them to make that decision. So those hedge fund managers are more vulnerable on a Friday afternoon than probably any other time. Okay. Last Friday, well, that's because, NFP is going to be NFP. But yeah. So, anyways, you guys know me. I like the yens, so I like to focus on them a lot. Are you guys trading like Swissy? This was one that we talked about last. Was it last year or this year? I guess it was this year, of a potential hold it and never get out trade. Too bad. I think I was in this for a while, like a bunch of them, and I think I got knocked out on this pullback. Look at that, just boom, gone now, huh? I can do whatever I want. I can see whomever I choose. I can eat my dinner in a fancy restaurant. But nothing can take away these blues. All right, right? Look at that beautiful 21. Doesn't that make you want to sing? Gorgeous stuff, huh? Look at 21 EMA, 21 EMA, 21 EMA, right? Guess you could even include that one. Nothing compares. Nothing compares to you. Yeah, just lovely. I don't think we were told. I'm just angry at the Swiss National Bank, but nobody was told to ignore Swissy. It's got negative interest rates, so you combine it um, with a high yielder like Kiwi, and you got a nice little pair. So lovely stuff, huh? Overbought now. Maybe on the shorter time frame, you see how this is overbought, and then we're kind of doing that. Be interesting what happens next. Mm, 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 mm. Do, 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 do. Do, 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 do. Do, 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 do. What happened to the? Oh, it's over here. Mm, 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 mm. Down, 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 down. Yeah, so you can see there's definitely a trend in play. Um, and one of the things we talked about recently, maybe a week or two ago, were the dairy auction prices. Well, says too much intervention. Yeah, but you know, as long as euro's coming down, they're happy. It's euro going up that they don't like. Or sorry, the other way around. Euro coming down. They're going to keep theirs weak. Oh, wow. Look at that. They changed the website. It went green. Wasn't it red before? Wow, that's a bold move to change your colors. Let's do here. All right. So one of the things we've been focusing on is, and I wish we could zoom in a little bit better than this, but we're focusing on since February, March, prices have stabilized. You could even see there's like a rally, a fibbed retracement, and maybe some stabilization. So the theory is perhaps the worst is over here, and that there's a floor built in at this level, Okay, and that maybe from here, there's more of an upward move. Now, of course, we're gonna have trouble around this area. Just we're analysts, right? We should be able to do that fairly easy. As long as we're heading up, that's going to be good for Kiwi. And then, of course, one day, what if it does this, right? So if this is happening, you know, you can see all we're doing is really moving sideways, but sideways is not down, which helps, right? I wish we could zoom in so the scale was a little bit better, but okay. So interesting, right? So let's again, let's take a look at just this area. Boy, I wish I could zoom in better than that. Okay. It was a low of 628. Okay. So if you take that and look at New Zealand dollar, I guess we can look at it this way. It's sort of this area here, right? So the bottom in dairy prices was, let's say, April 1st. Let's say April 1st. And on this chart, April 1st is March, April. There's the bottom. Oops. Isn't that interesting? Since you've been gone, I could do whatever I want. Yes, we can do it that way. What do you guys think? Is that an interesting coincidence? Okay. Now, what happened before this bottom? There was actually a lower dip followed by a significant rally, Fibonacci retracement, and then back up, right? The dip is represented here, right? Now, when was this dip? The dip was August 2015. The low point, right, is August 2015. Ow! What? Oh, snap. So the ultimate bottom is actually here, and it's the exact low over the last, it's the double bottom over the last 10 years of dairy prices. The exact double bottom occurred with the lowest low of the Kiwi dollar at exactly the same time, lowest in 10 years. Isn't that interesting? Then dairy prices rallied up. Then dairy prices made a Fibonacci retracement and then stabilized. How interesting is that? Who would have thought that you'd be a currency trader watching dairy prices, global dairy prices? Isn't it a strange world? Now, in November of last year, I did a video for you. And the video is missing, but let's see, is there a link to it? How funny, the video is missing. I'll have to get you the video then. About how I did it back in November. Let's see. Search all of YouTube. Cows, kiwis. Apparently, I'm the only one in the world that has done a video about cows and kiwis. Cows and kiwis, the hidden relationship of the New Zealand dollar and dairy prices. Oh, snap! Oh, is that it? Cool. Neato. That's so neat. So wow, cows really are the theme today, right? We did the moo trade, which is not the dairy market kiwi trade. How interesting. You guys are very interesting people. See where you lead this? I mean, you're the boss. I'm just a humble currency analyst. This is where you took us today. How interesting. Well, let's end it there because I don't have any other cow things to talk about. Did I tell you my chicken experience a week ago? I think you know all my stories. Yeah, I saw somebody feed chickens with bananas. Yeah, there you go. Charles got it. I saw a chicken eat a banana. No joke. Actually, I watched two chickens and a rooster eat a banana. Now, picture that. I'm not joking. Let me tell you, chickens. It's not an easy time for a chicken. You know, they can't easily eat a banana, but they love it. Yeah, I know, isn't it, Ron? Yeah, two chickens and a rooster come in the bar, and they say, "Give me a banana." I'm sorry, sir, we don't serve roosters here. I said, "Give me a banana." Sir, read the sign. No roosters, no chickens. And the rooster leans forward and says, yeah, I can't say that in polite company. So anyways, peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow. I hope you have a wonderful trading day. Peace on earth. May the pips be with you. May your profits be above average. Bye-bye.